Welcome back, everyone. You're watching Entrepreneur, and in today's video, we're going to be going over understanding risk management and applying it to your trading strategy while being able to go ahead and systemize your trading. But before we get into the topic of this video, if you guys are new to the channel, definitely consider subscribing as we put up 1 to 2 videos a day focused on trading cryptocurrency and helping you guys become better investors. Now, for those of you guys who are looking for a community of passionate crypto traders and investors, check out our private signals trading group in the first link of the description. That's where you guys can find everything you may need down in the description below. So guys, this is going to be the first video in a 3-part series that I wanted to do about a topic that I've been getting a lot of questions about. Now, the topic is going to be 3 commas. This is a software I have been using myself for a while now, allowing me to systemize my trading. That is, planning out a trade and being able to place a buy order, or whether it is if I've already purchased something and I want to sell at a certain point and also have a stop loss at a certain point. This software allows me to automate all of that, as well as being able to automate profits with some of their bot features as well that we'll go over in the last video. So you guys will definitely want to go through this entire training. So starting off in this video, again, I wanted to talk about risk management and helping you guys understand why this software is so important to anybody's trading strategy. So a big part about trading is obviously risk management. Now, if you didn't know that, it's definitely a good thing to understand, because if you don't have a risk management strategy, you'll probably find yourself losing more times than you do win. So whatever your strategy may be, it doesn't really matter. You always need to have a plan before you go into a trade when it comes to managing your risk. So let's say for Litecoin, we're going to do a bit of an example here so I can walk you guys through all of this and what you're going to look for. Let's say we want to enter this trade on Litecoin right here. The reasons being, we see that it is oversold on the 1-hour time interval. The MACD is starting to turn up and the volume is starting to go towards the buyer side. And we see that it is at a previous support line that we can see from the past few days and few weeks. So we want to enter the trade at this point, and for those reasons exactly. So we decide that we want to take a position, but we don't really know, where are we going to sell? Where would we cut our losses, right? If you just decide you want to buy something, you don't really know what you're going to do with it after that. So oftentimes people find themselves holding something for too long and then selling it at a loss because they didn't sell when it was at a profit, because they wanted, they didn't really know where their goal to sell was. So we decided to pick it up at $47.88, right? So we go ahead and buy right around there, and it looks like, within a few days, Litecoin has actually gone up quite a lot. In about 6 days, it's up 10%. So now that we're up 10%, we don't really know what we're doing, right? We still haven't sold, although it's up 10%, it was up 15%, so we could have sold there. But since we don't have a plan, we don't know what we're going to do. So let me show you what exactly we would have done if we had a risk management strategy, right? So I'll jump into a sketchpad here just to show you guys a little bit. So the whole idea of risk management is being able to basically identify 2 things. One, how much you are willing to risk on a trade, right? How much you're willing to take a loss on, and what kind of profit are you looking for this specific trade. So first, I recommend you guys starting off with the time interval, okay? So go ahead and address where the time interval for every single trade. And you guys can go through this process literally in every single trade that you do. First off, you want to address the time interval, right? So for me, that is currently the 1 hour. I am picking up a trade based off of decisions I made that the technicals look good on the 1 hour. Maybe I had influence from the 4 hour or the 5 minute, but still I made my final decision based off of the 1 hour chart that we were just looking at, right? So first, we understand the time interval. Second, you need to understand the profitability, the profit margins, the margins of a coin, okay? Every single coin is different. We're currently looking at Litecoin, which in a 1 hour time interval may usually have a margin of anywhere from 5 to 15%, whereas another coin may have an interval for a 1 hour from 25 to 50% on a 1 hour. So it really depends on the coin. And guys, really the way you do that is you come back here, and on each time interval, depending on your criteria for when you enter a trade, for me in this example, it is based off of the RSI and the MACD. So let's say every time that the RSI is oversold on the 1 hour, you're just going to want to take a few examples, from the last few weeks. You want to go back a good amount and just kind of get a feel for the profit margins on every single time your criteria was met. What were the returns like within the next few hours, few days, whatever it may be. So I'm going to use, for example, anywhere from 10 to we'll just say anywhere from 5 to 15% for Litecoin, right? So 5 to 15%. So let's say the trade we entered, since it was such a low price, we're looking for a 15% trade. Okay, so now that we've understood the margins, anywhere from usually 5% to 15%. Now we want to go ahead and calculate our stop loss as well as the point where we want to take profit. Okay, so we bought at right at 47.83, I think it was. Yeah, 83. At first it was 88, but then we switched it up to 83. So for 47 to 83, right? Now what we want to think of is we need to think of a ratio that we're going to stick with and use for every single trade from here on that we use for this specific time interval. Okay, so each time interval can have a different, what we call the ratio that we use, the risk management ratio. And that is going to be different for every single time interval. So for the 5 minute, it may be a 1 to 3. For the 1 hour, it may be a 1 to 10 or 1 to 5, whatever it may be. You guys need to figure that out. But for me, usually I actually use the same ratio for the most part. It switches up sometimes on the smaller time intervals, but for the most part, I always use a 1 to 5 ratio. Okay, so this means for every 5% potential for profit, okay, profit, that I identify in a potential trade, there is going to be a 1% loss. Okay, so my stop loss, if I had bought at 47.83, would be minus 1% would be the stop loss, and 5% would be the profit target. But for these margins, we're actually going to look for a little bit higher. So like I said, we're at a low support. We're at one of the very all-time lows for Litecoin, at least in the past 9 months or so. So for this example, we're going to be looking for a 15% trade, right? So we want to, in this case, go for a 15% potential for profit. So how do you calculate that? I thought the ratio was only 1 to 5. Well, it's very simple math, guys. Okay, so you just do the profit that you've identified that you're looking for, and just divide it by the second part of the ratio. So divide it by 5. And it now equals 3, right? Now all you have to do is take this and you do 3 times whatever your loss may be, your stop loss, the second half of your ratio. So obviously 3 times 1 is going to be 3, and that is how we calculate our stop loss. Okay, so now that we've calculated our stop loss and our profit target, we have a plan for our trade. Okay, so again, in this first video, I just wanted to go over the importance of a risk management strategy and how to break it down and use it for every single that you have, so you guys can be consistent with not only your trades but your profits as well, and even your losses, right? Everybody's going to have losses once in a while, but it's always better to just take those losses and move on to the next trade. So again, for this example, 15% potential for profit, 3% stop loss. So the way that we would use the software is actually what we're going to discuss next in the next video, where we're going to go over all the features that helps exactly with what we're doing right here, and with being able to just plan out the entire trade before it even happens, and it just completely filling through automatically. So hope you guys enjoyed the beginning of this video, and again, if you guys did like this video, leave a like, and for those of you guys